The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I am your host, Darrell Martin. I hope you're having a great day out there in the markets right now. Markets actually giving up a little bit after all that steam that they kept pushing through last week. We got the S&P down 5 points. Right now we got the Nasdaq down 1.25. And it's right now it's down 1 point on the day. We got the Dow down 52 and the Russell only down a mere 1.5. We got gold down 3 and 3 points right there. And we got copper down almost 0.5%. We got silver up about 1/3%. And we got corn is up 2.75 points right now, with soybeans up 10.5, being one of the movers and shakers of the day. Pretty quiet overall. Looking over at oil, it's just up a mere 10-11 cents right now. And we got natural gas. It is probably the biggest mover of the day right now, down 1% on the day so far. Not a big move for natural gas, but a big move in comparison to most other markets. On the euro dollar, it's up 43 pips. The pound dollar is up 19, and the Aussie dollar is up 7. The U.S. yen is down 44, the U.S. franc down 26, and the U.S. Canadian down 12. So the dollar is showing weakness across the, well, actually the dollar showing weakness for euro, pound, and Aussie, and showing strength on euro, franc, and Canadian. So just depends on how you want to look at it. But I guess really overall, we're looking at pure dollar weakness. So we got the DX also down 0.245. So yeah, sorry about that. Dollar showing weakness across the board, but not a whole lot of weakness, just a little bit of weakness. And shouldn't be real surprised. We do have Bernanke's helicopter drop of bonds kicking in this month, and I think we've already seen some of that in action. But we'll just sort of see how it all pans out. But seeing the dollar weaker and the market weaker at the same time. So all sorts of fun things happening right now. And so going on in and checking out what else do we got going on right here. And look at the news for the day. We got the foreign currency reserves happening right there on the franc. And that number was released last night. Let me go ahead and pull that up for you. There we go. And I'll load it up. So let's back on out and check out 10-minute bars over here. So we got 10-minute bars looking at this, and the number came out pretty early last night. Came out at about 3 a.m., 2 a.m. Central Time. So right here, ever since that came out, you started showing a little bit of dollar strength, or a little bit, franc strength and dollar weakness. I'm all backwards today. But and then it just sold on off this morning. So franc right there showing some definite strength compared to the dollar, and dollar franc dropping. Looking on over at the pound, we had a little bit of action, but not a whole lot right there with the Halifax report coming out. We can check that out. That number came out again also at 2 a.m. and showed some pound strength, dollar weakness. Looks like the driving factor across the board really just being the dollar overall. Checking out our IV PMI, that came on out of the U.S. CAD there out of Canada. Came out at 10 a.m., 9 a.m. Central. And you can see there was a lot of volatility. I mean, or I guess it's not a whole lot, but about 10 pips of volatility, just up and down right before the report. And when it came out there right at 9 Central, 10 a.m., it dropped on down. And that IVPMI coming in actually better than expected, giving more strength to the Canadian dollar. And, of course, then the added weakness of the U.S. dollar overall. And just continue to drive that a little bit lower. And really just been flat all morning ever since. I mean, it's been up, it's been down, up, down. We'll see where it ends up by the end of the day here. And looking on over, what else do we got tonight? We got our trade balance over on the Aussie dollar. Trade balance coming out. And basically that's the measure of the difference in exported goods out of Australia. And so that is usually a bit of a market-moving event right there, the trade balance report. Again, 7:30 Eastern, 6:30 Central. So for you part-time, nighttime traders, you can check that one out. And then looking on over at some of the other markets for this week before we get into that, if you're wanting to know how would you trade that Aussie dollar trade, what you're going to do is hop on over to tfnn.com. And as soon as you get there, go ahead and click on this Nadex banner right here. And once you click on Nadex, you can sign up for an account. You get a demo account in about 15 seconds under our products. Just click on Demo Account. and fill that in. It takes you literally 15 seconds if you're a slow typer. So your username, first name, last name, phone number, and email address. Click apply for demo. And what they'll do is they will send you a password, and you'll be able to log in and check out Nadex. And if you want to get a live account, which I highly suggest you do, go ahead and go over and click on Create Account. And you can go from start to funded. It's only $100 to fund a live account. Both of them give you a live data. The demo does use data from the demo feed, so if somebody else puts a demo order in, it can sort of affect the bid ask and everything else. Live data shows you everything live. But your charts, your data, there's no commissions, but your charts and data are included. Your platform's included, so there's no platform fees, no data fees, no commissions. The only thing you do have is exchange fees. They are an exchange, so they're not an over-the-counter bucket shop or whatever. They're an actual exchange, which means you're anonymous to the other side of the transaction, whether that be another trader or a market maker. They don't know if you're getting in, getting out, winning, or losing on the trade. And that's where if you're going to be trading binaries or if you're going to be trading this unique spread, I call box spreads. They're not like call puts or, they're not like, they're not like calls or puts. They're not like, call spreads or put spreads. They're totally a unique instrument. They're not, technically a box, so I call them, bull bear box spreads, because technically a box is a interest collection or paying strategy, but you don't really make so much money on direction of the market. But bull bear box spreads you do. And if you've watched my show at all before, you know why I call them box spreads, because if you put them on the chart, they look like a box. And but anyways, go ahead and sign up for that. You can check it out. And some of the things you can do is you could actually go in and straddle or strangle. You can straddle on the spreads or strangle, meaning buy a higher strike and sell a lower strike. And if you're like, well, how do I trade these things? Well, of course, you can always check out our archives. But also, one thing I highly recommend, go over here and check out the Diagnostic Box Spread Analyzer. And basically, it's all about Nadex, but it also has a couple other things you may not be aware of. It goes into tutorials on the binaries, tutorials on the Nadex spreads. It goes into how to open an account, how to use the platform. It also goes into how to trade them in various different ways. Plus, you get access to my live box spread analyzer. That's the number one thing. Is what I do is actually take all the data from the Nadex exchange and feed it directly into the server live, and it updates it and does all the math for you in seconds. So instead of you having to look at, 20 to 30 something different possible choices, you can find the best spread for your trade. If you want to buy the euro dollar, which spread do you buy? So you don't have to go through and analyze 13 different buy spreads to figure out which one is the best one. You can easily figure it out. And so this helps you do that, because in trading, you don't have time, nor probably do you have the desire to sit there for 30 minutes and figure out which one the best one is. And this one does that for you. I teach you how it works, and you could do the math yourself, but by the time you're done with the math, the trade's over. So this will let you find the right trade, and it lets you open the trade in Nadex instantly. And you can try all this out for 2 weeks at no cost. The other big thing you get access to is you get access to the deviation levels. And the deviation levels, I constantly get positive reviews on them of how just insanely accurate they are. And what they do is I go in and, you've heard of pivot points. And, we've all heard of pivot points, right? We've all heard of ATR, and we've heard of standard deviation and things like that. Well, the problem with all of those is they all work on an assumption based on historical information. Okay? So, again, historical information. Well, we're not worried about history. We're worried about the future. We're worried about what's going to happen today. And so we're going and we're making trades based on what we think is going to happen today. So how do we know how far the market's going to move today? Because historical pivot points and standard deviations based on historical volatility are not going to help us with that. Not accurately enough to something that we can just totally trust in. And really, why would it work? Well, because other people use it. That's about as close as we can get to explaining it. So why would this deviation level thing work that I'm talking about? Okay? So whenever you're using an indicator, it's always good to understand the why. I love to understand the why, and that's not always possible. Some things just work, and if they just work for you, then keep using them by all means. But it's nice when you can understand the why. If it works and you actually understand why it works. Well, why does this work? Well, it's because what we do is we go in and we pull the implied deviation, okay? Or the implied, sorry, not the implied deviation, the implied volatility out of the underlying markets options. So out of the S&P 500. So if you're a S&P E-mini futures trader, or you're an oil trader, or you're a euro dollar spot FX trader, or any of these other markets that we cover, then we go in and we pull the options out of there. And we pull those options out, and then we take 16 different options, 4 options from each month over 4 months. We then make our own volatility index. We weight them based on what month they are, and then we pull the implied volatility out of the option price. So what is the implied volatility? Again, implied means expected. Volatility means movement. So the market actually prices in to the price of the option how far they expect that market to move. So they don't expect a stock that costs $30 to move $100. So you're not going to have that much volatility in there. They expect, different options or different underlying markets to move different amounts, and they put that price in there. Well, why would they do that? Well, basically, just think about earnings. Okay, when earnings is about to come out over the next 30 days, options will get more and more and more expensive. They'll be at their most expensive premium right before a big move happens, because there is a expected big move, obviously, right before an earnings announcement on some stocks. Now, other stocks that they don't expect any move, they may not be that expensive. They'll still be more expensive, but not that much. But you go into like an Apple or a Google or something like that, then there's going to be a lot of implied volatility built in. Well, after that move happens, the next day when earnings comes out, then all of a sudden all that implied volatility premium gets sucked out of the option, and there's less movement expected. Okay? And so understanding that the market actually does tell us how far the market expects to move, and being able to extract that number and then tie it into a deviation, not a standard deviation, but an implied deviation formula. And it's an intraday deviation formula. It's used for one day to tell us how far does the market expect the market to move today. And then we can use that when setting targets, when setting take profits, when setting potential reversals. There's a lot of different ways that we can use it. But, the bottom line is you can use it to help you whenever you're trading, such as if I'm looking at, right here, the U.S. franc. When it came in, it settled, it actually went on up. It went one deviation, which is actually how far we expect the market to move on any given day. Okay, so it actually rose up to one deviation level today and turned right around after it hit it. But one deviation means that we think there's about only a 30%, 32% chance that the market's going to go further than that amount. And so whenever you're setting a profit target, whether you're using USD, franc, whether you're using the futures, whether you're using like Success, whether you're going in and you're using, binaries or spreads, it's good to know what your profit targets are. At that point, you're going to be tightening your stops as soon as it touches it. Well, you'd be glad you did, because it turned around and it went back the other direction. It not only filled in, what you could say, the gap, but it also went ahead and went further down. It went to a 0.5. It hesitated right there for a little while, and now it's dropped down to 0.7, and it may move down to one deviation on the downside, and that's 0.9283. Now, I'm not saying it won't go further. I'm just saying there's only a 30% chance it will go further. So if it does go further, great. That's why I tighten my stop. I don't always exit when it gets there. I may tighten my stop, and each time it hits a new deviation level, tighten it again and again and again, and see how big a move can I get. But you can even see here's from last Friday right there, it moved down one deviation and just stopped right there. And so that's really what we're expecting, is the market to move one deviation on any given day, one implied deviation. And again, why does it work? Because it's how far the market tells us the market will move on any given day. So you'll get access to that right away as well. And again, all this for a 2-week trial. Costs you nothing to try it out and check it out, and I hope you do, and I look forward to hearing your feedback on how well they're working for you, because, like I said, I get a lot of positive feedback. And you have access to the basically help desk area where you can ask me all the questions you want. You just go in there and click new and ask me any question you have about Nadex, futures, forex, deviations, anything, and I'd be glad to help you out. We'll get back. We're going to look at what else is coming up this week, what kind of market-moving events we need to be looking out for. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And if you have any questions about stock, forex, futures, options, Nadex binaries, Nadex spreads, anything like that, go ahead and feel free to give me a call. You can reach me right here at TFNN at 1-877-927-6648. Again, that's 1-877-927-6648. So let's go ahead and check out the rest of the week and what we have coming on up. Well, right now we have, let's see, tomorrow, a lot of minor reports coming out, nothing that big. We will have a medium impact report. A few of those coming out of Europe. Europe will have retail sales month over month. The unemployment rate will also be coming out of Europe. And, it's not as big of an impact because usually we're looking at a lot of the other ones, but it still will have it because, we like German unemployment, Spanish unemployment, things like that. And then also we have the German factory orders report. That will be coming out at 6 a.m. So you got two reports coming out at 5, retail sales and unemployment rate, and the German factory orders coming out at 6. And those reports, let's see here. I'll just let you know where you get them. You get one of them off of Eurostat's website. So if you just Google Eurostat, you'll be able to find that pretty easily. But you can go in there and pull that one up. And that's for the retail sales report. And then for the unemployment rate, that'll also come off the Eurostat website. And let's see here if they list it on the exact same page. Yep, they list on the exact same place. And again, that's epp.eurostat.ec. And but the whole thing goes on and on and on. So it's like europa.eu. So just Google Eurostat, and you'll find it a lot easier than trying to just remember what I say on the air here. And then also we got the Germans Bundesbank will be putting out the factory orders report. And so you can go there and check out that on their website. And that's BUNDES bank.de. So basically this bundesbank.de. And so that's the German factory orders report. Those will be your major overnight reports that will be scheduled to come out. And then we get some more Aussie trades. 7:30 retail sales month over month coming out. That comes out from the Australian Bureau of Labor and Statistics. And you can check that out right here at the abs.gov.au website. And so that link right there will update. You'll be able to see everything. And then we got some trade balance numbers that are going to be released over the next several days. They'll be released out of China. So they'll be actually releasing trade balance, new loans, M2 money supply. They've all, basically it's the 9th through the 13th. And we don't know the exact time that it'll be released. It leaks usually early by the news agencies. So it's not really a timed trade you can do. Most of the reports out of China are like that right now. And then going on over and looking at Wednesday, we're going to have trade balance coming on out, just like we had the one for Aussie come out. We'll have the trade balance come out of the UK. So that's a medium impact report again. You want the high impact reports are usually best, but it's just good to be aware of the medium impact reports. And you can get that off of the ons.gov.uk website. And that'll come out at 4:30 a.m. The next medium impact is German industrial production. And that report will come out, let's see here, at 6 a.m. Eastern time. And let's see here, I'm trying to even pull up the website right now. It looks like I don't even want to pull up. But it comes out the status. If I can get it, there we go. The main website right there. That's DES. There you go. DESTATIS.de. So the status report. And these things, again, just let you sort of know what's coming up, what to be aware of. And then, of course, we're back on schedule. Crude oil inventory reports coming out on Wednesday at 10:30. And it's sort of nice. It's actually this link right here I'm putting up. It takes a little bit of time for it to load. But it'll actually start counting down right before, like a couple minutes before the report comes out. You can just hit and refresh. And I want to say it's like the second or third paragraph, like the first couple sentences there, you'll actually see what the inventory report number is and what the expectations are. So we'll have that information. There it is. So yeah, we'll see here. Removes. There we go. Third paragraph, second sentence, decreased by 11.1 million barrels. So that's the number you're looking for. After the expectations get released, you want to know what the actual number is. And those expectations will come out anytime this week. And then we'll be looking at to see, is it lower than last week? Is it higher than last week? Is it lower than last year? Higher than last year? Is it lower than the number expected? Higher than the number expected? So if it's lower than all three or higher than all three, then you can definitely have a major move. Lower supply equals higher price. Higher supply usually equals lower price. So, but that was definitely a drop in inventory. That's sort of opposite of what's been happening. And it hadn't been that small. It's been like -6 versus -1.6. But they thought it was going to be -0.7, and it was -11 last week. And then also here in the U.S., we'll have a 10-year bond auction. I'm sure Binaculum will make sure that goes just fine. And let's see, the Treasury. I was reading an interesting report about the Spanish bonds, like how they've been staying low. And it's been really interesting that they've been staying so low because they shouldn't have been. They actually ticked up a little bit recently. And we'll come to find out they've been using the Social Security pension fund to buy the bonds. And they're actually 90% out of that money now. So Spain may be coming into light very soon. There, we'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. We're checking out different reports. We're talking about also Spain has been using their Social Security pension fund. And so, of course, the big question is not only the massive fallout when they run out of that money, but also what do those people do when they go to collect and there's no money there? Who's going to pay for it? So it's pretty messed up. And, you know, so far the markets have been sort of quiet. They bought some time, but they haven't really put a solution in place. And Spain has not requested a bailout. They've also said they're not going to agree to austerity measures. They're already at 25% unemployment. They already have massive taxes. They're doing all these other things that they're doing. And so even though, you know, Mario Draghi has said, hey, you know, we'll do everything. We'll do unlimited bond buying and all this stuff so long as everybody agrees, because they can't really do unlimited. Like Germany has to stamp on it and, you know, other things like that. But it's so long as they agree to their terms, the country. So really there is no solution in place. That was no different than before. It's just now Draghi can step back and say, hey, it's not my fault. Germany won't approve the amount, or it's not my fault. Spain won't, you know, approve the austerity measures, and they won't be fiscally responsible, so we can't take it on. It basically gave him a way to say, I've done everything I can possibly do to make this work, and now it's somebody else's fault. So, but yeah, start watching. In the next couple months here, we're going to see, I think we're going to see some very interesting happen on Spanish bonds, which is going to create the whole Europe risk contagion. And at a perfect time when we have absolute gridlock in Congress. And, you know, the president's saying he wants to talk about, and Pelosi especially talking about how she wants to talk about, you know, raising and adding more taxes. And in addition to getting the debt ceiling increased, which is just amazing. McConnell's like, taxes are done. We settled this solution. That's not even going to be open for discussion. And so she's saying, no, they will be open for discussion. And then Obama's saying, I'm not talking about any kind of deficit reduction in regard to the raising the debt ceiling because, well, that's according to the 14th Amendment. We cannot bring our debt into, question. So, will he invoke the 14th Amendment and basically just override the debt ceiling? Clinton did suggest it, actually, back in 2011 when this big thing was going on. Obama did check with his lawyers and literally made a statement that he did check in to see if he could just invoke the 14th Amendment and push it through anyway, and said it was a very weak argument that he didn't think could get approved. So we'll see what really happens. And then I've seen this big thing circulating, which is completely bogus. But, has some realistic information in it, but there's a in the code and the basically the way it's written out for the ability to print money for the Treasury that actually allows them. Geithner could print, and this is hilarious if you haven't read this story. Geithner could print, or had the mint, basically mint a $1 trillion platinum coin because the Treasurer is allowed and authorized to mint a platinum coin in any denomination. See, like, the penny, the nickel, the quarter, all this stuff is all defined. But he can do a $1 trillion coin. It could be something that can fit in your pocket. It doesn't matter what size it is because it's not about what the coin's worth. I mean, just think about all the coins we have now and what they're worth. Usually less than what they're printed on. But he could actually mint a $1 trillion coin. Why would he mint a $1 trillion coin? Well, the idea is he could then walk over to the Fed and deposit $1 million into the Federal Reserve. And according to the rules for money supply, money inside the Federal Reserve is not counted towards the money supply. Okay, so the idea is this then lowers the national debt by $1 trillion, and therefore averting the whole debt limit issue. He's also decreased the debt by $1 trillion, supposedly. And they have to take it because all money minted by the U.S. Treasury has to be taken as a valid foreign payment for U.S. debt. And so it's basically this loophole that actually does exist. And however, all the arguments say this wouldn't affect inflation at all. What they're forgetting is, okay, let's just say that did work, all right? Well, that would lower the debt ceiling by $1 trillion, okay, or the current debt by $1 trillion, because we paid off $1 trillion in debt to the Federal Reserve. But it doesn't really not affect the money supply. I understand the $1 trillion coin in the Federal Reserve's coffers would not contribute to the rating of the money supply, but it would directly relate to the $1 million that's being spent, right? So if when they print $1 million, which is the whole point of raising that debt ceiling is so they can print and spend, not $1 trillion, in benefits and, war and everything else, all the other things that they want to spend the money on, running the government on a daily basis and, et cetera, et cetera, et cetera. That extra $1 trillion is going to go into the money supply. So it doesn't matter if you put $1 trillion coin in the Federal Reserve's, account so they can, lower it by $1 trillion. That $1 trillion coin isn't going to the money supply, but the $1 trillion in additional debt is. In other words, when they go take out another $1 trillion and they put that money out there and it starts turning around, that does go into money supply. That will lead to inflation. And it starts to, really what it would do, here's the biggest issue with it. One is they actually could do it. Two is if they do it, that sort of reveals the true process, the true reality of the Federal Reserve and taxes. If the Treasury can print a $1 trillion coin, then why can't it print $10 or $20 trillion in coins? Or just print a $20 trillion coin and give us a surplus? If it can do that, why do we need to tax anybody? Okay? Why should there be any taxes? If it can just print the coin and go over there and put it in the Federal Reserve and then borrow money from the Federal Reserve and pay it off by printing a coin, because there's no reason to tax people if you can just make a $1 trillion coin to get revenue. And by doing that, they would show the real reality of fiat money and the absurdity of the Federal Reserve and the complete absurdity of income taxes when you have the ability to print money. So I don't think they want to do that because they like that power play, especially the Democrats love that power play of being able to talk about taxes and the rich and the poor when at the end of the day they can just print a $1 trillion coin and pay it off and not tax anybody. Of course, when they do that, then the absurdity comes to light. Everybody goes, wait a minute, well, these dollars are really worth nothing. Yeah, no kidding. But it would make it, like, even the common man would start to question, okay, the person who's not educated at all, and I don't mean, stupid person. I just mean, uneducated about the facts of how the Federal Reserve currency system works. The average person would start to go, wait a minute, So this money isn't really worth anything. But of course, the average person would also go, well, this is pretty sweet. That means we don't need taxes anymore. We get all the benefits we want. Of course, you know, a loaf of bread is going to cost you $1 trillion. But besides that fact, because the hyperinflation that it would, ensue from that. Anyways, that's just an interesting story. I read about that, and that's the one piece. And I mean, this has come up like from people from Bloomberg. I mean, it's all over the place. News, not Bloomberg's office, but even some senators have brought it up. So it's just an interesting idea, but the one piece they're always missing is, well, that extra trillion they are going to spend, not the $1 trillion coin, but the extra trillion they're going to spend would go into the economy and would lead to inflation. And then, of course, if they do one, now why not do 10 or 20? And if you can do that, why do taxes? So no, they don't want to go down that rabbit hole because that's where it leads. That's what they could do, and that's how they could solve it. Of course, it would destroy the currency, but they're doing that anyway, so I don't know which one's worse. This one makes it happen faster and in more reality. But, yeah, just a totally off-subject thing. But I thought, look it up, $1 trillion coin, Google it, you'll see it. Anyway, so what else do we got? We got building approvals coming out of Australia, so it's going to be a nice Aussie dollar trading week. You can go in there and get 10, 20, 30, 40, 50 pip moves on the Aussie. 7:30 at night on Wednesday, building approvals. And that report will come out also on the Australian Bureau of Labor Statistics website. So I'll throw that up there for you. It's abs.gov.au. Check that one out. And let's see, for Thursday, what do you got? We got, let's see, a few different things. We got asset purchase facility and official bank rate. So the bank rate coming out of the British pound. Also, the minimum bid rate coming out of the euro are coming out this week. So basically, their Fed funds rate. Okay? And so let's see here. The rate statement is tentative, but the official bank rate itself will be released. But whether they're increasing it, changing it, leaving it, whatever. Pardon me. And that'll come out of bankofengland.co.uk under their monetary policy section. And so that'll be the official bank rate. That'll also be where the asset purchase facility information is released. And then let's see here. They'll go in. That comes out at 7 a.m. on Thursday. Okay? So that's definitely going to be, or should be, a pound dollar mover. So there's your trade right there for Thursday. Then they'll have the rate statement come out shortly thereafter. 45 minutes later at 7:45, you're going to have the European minimum bid rate, so basically their Fed funds rate. And that'll come out on the ECB's website, ecb.int. Again, the ecb.int. And you'll be able to read that on their side over there. And so that comes out at 7:45. So we're going to have some nice currency moves here on Thursday. The ECB will be following up with a press conference that'll also be released on their website. They'll come out and basically the ECB's president and vice president will come out and have a little talk about why they're doing what they're doing and everything else. And like I said, just wait. Spanish bonds coming into focus soon. That comes out at 8:30 a.m. Eastern time. And then we'll go over. We're going to have unemployment claims like we have here every Thursday, or most Thursdays, unless there's some sort of holiday thing thrown off the schedule. That comes off the Department of Labor website here in the U.S. So, of course, that affects our currency. It affects our indices. It affects a little bit of everything. But it hasn't had the biggest impact lately. So the unemployment claims does not have the biggest impact lately. It has to be pretty big to have a big impact. Also, we'll have natural gas inventories at 10:30. So if you're a natural gas trader, if you want to trade natural gas over on Nadex, you can check that one out. So it's giving you a whole weekly lineup of potential trade setups so you can start to plan your week. And this is that fundamental part, being one step ahead of the markets. One, not only knowing when they're coming out, but what you can do to possibly, start looking at strategies you can do to take advantage of it. And then we also have the 30-year bond auction coming out at 1 o'clock here in the U.S. Usually not a major market mover. We'll see how that goes. But they came in at 2.92 last time, so been ticking up a little bit there. And from 2.82 the previous, and 2.9 the previous to that. So, ticking in a little bit higher. And but there's not really a consistent effect on it, so it's sort of considered a minimum impact report. And then a couple FOMC members are going to grace us with their presence. FOMC member George is going to speak. And he's coming on out. Let's see here. He's going to speak economic outlook at the Central Exchange. He'll be talking there in Kansas City, and there will be Q&A. And so that'll be released on the Federal Reserve's website, or actually it's going to be released on Kansas City's Federal Reserve website. So kc.frb.org. And so if you want to see what he said, and of course the what comes out of those Q&A will be, if there is any impact, that will be the impact, and that he'll come out of the St. Louis Fed. That announcement right there, and his little speech will be speaking about U.S. monetary policy and the economic outlook at the Wisconsin Economic Forecast Luncheon. So, and that's going to be FOMC member Bullard is going to be talking. That's at 2 o'clock. So, FOMC member George at 1:10 and FOMC Bullard at 2 on Thursday. And let's see here. Any other market events? We're going to have current account coming out of yen. So, again, that's the difference between their imported and exported goods. With all the yen things that have been going on, that's probably one that's worth watching. And so that'll come out of the Bank of Japan's website. And that's, let's see, what is it? mof.go.jp. So mof.go.jp. So you can check out the current account out of there, out of the yen. And then we'll have CPI coming out of China that's actually expected, amazingly, to come out at a certain time, one of the few numbers. And so right here, I'm going to pull that one up for you. And that comes stats.gov.cn. And so you can get your statistical edge there. If you go in Google Chrome, it ought to translate it for you if it doesn't automatically. And let's see. Then we roll on over and finish out the week. On Friday, we're going to have a CPI number coming out of France. Or not France, the franc. Yeah, that'd be totally different. And so we got right there, that'll be bfs.admin.ch. And you'll be able to see the latest release. And again, you can use Google Translate. Right here, I have the pages in German. What would you like to translate it to? Yes, I'd like to translate it. And it'll translate it to English for me. Makes it nice and easy. So you got to love that. And then you go on down, and we'll have Italian 10-year bond auction coming out sometime on Friday. Time not yet announced. We'll also have manufacturing production on Friday out of Britain. So pound-dollar mover at 4:30 a.m. And that'll also, again, come out of their statistics office right there. I'll show that to you. And it's ons.gov.uk. And I always suggest you do line these up and know when the big reports are coming out. And then we'll have a trade ballots report coming out of Canada. And Canada's been having some great moves. This isn't as big of a day for Canada right here. So let's see here. Let me get you the main website because that link will be expired. There we go. All right. So statcan.gc.ca. But you can go over there and U.S. Canada has had a lot of great reports. We don't have as many things happening at once. We only have 3 reports. But another list, a trade balance report out of Canada and a trade report balance out of the United States at the same time, 8:30 on Friday, should make for a nice U.S.-Canadian trade, potentially for even a straddle. So, or a straddle on the spreads or a strangle on the binaries. And over at Nadex that you can check out. All right, so that pretty much wraps up all the big numbers that we need to watch out for. There's a couple other medium and small impact that really shouldn't have any kind of major impact on the market. And then, of course, the other things that have the big impact on the market, we'll talk a little bit more about that, and we'll go into the deviation levels for the day. But, just what rhetoric is coming out of D.C. So, everybody's expecting a battle. What kind of battle is it going to be? And, there's just all this stuff about the $1 trillion coin. I'm looking at an article right now. This thing's made it all the way over to the UK now that they're talking about it. So here you go. It says you was seriously considering. I wouldn't say we're seriously considering. But $1 trillion coin to pay off the debt. So here's just one of the many stories. I just saw this one come across the newswire. But anyways, feel free to check that out. Now the big question apparently is whose name and face, or whose face are they going to put on there? And everybody's thinking that Reagan might be the best person, or Obama, who knows? But whose face would they actually put on this coin if they did, in fact, print a platinum $1 trillion coin? Stay there, folks. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right there. Hello, everybody. Let's go ahead and check out what's going on in the markets right now. As we know, most of the indices right now are pretty flat overall. But we can go ahead and look at them. We got the S&P right here. We got the S&P right now. It's like down to a low today. 1450.75. We had 1451.3 is our first deviation level. It basically just bumped that and came back up and it's chilling out right there. And I think we'll find the same across most of the indices. We had NASDAQ actually hit its low right there off the open. And looking on over at the low of 2702.5 and 2699. So we're just a few points away from hitting its first deviation mark. And then hopping on in, looking at the Dow. The Dow is showing continued movements down to lower levels. We got the low right here now of 13,279. 13,292 actually being the first deviation mark. 13,270 is the next goal. So definitely hit that first level and pushing on down and looking at the possible level after that. But it's moved its half deviation for the day. Looks like a half deviation day overall so far. And then if we go in and narrow it down, look at the Russell. The Russell moving on up first to a high of 873.9, which really just means it filled in its gap, okay? And then came on back down and hit a low, 870.3, and 868.4. So it hadn't even moved a full half deviation, just oscillating around in a whole lot of nothing so far. We got natural gas. As we know, that one has moved quite a bit there. Look at that drop right there in natural gas. Hit a low of 3.238, and 3.238 would be just past the half deviation mark, which would have been your first tightening on your stop right there. It'd be right here, just above this high of 1.3263. We'll see if it keeps moving down or closes out there. But the next mark would be 3.227, and then on down to a full deviation of 3.202 if it continues to move. But with all that volume, looks like to me they filled most of the orders. It's probably pretty done and probably cooked for the day. And look on down, we'll check out oil real quick. Oil did a little spike up this morning, and we got up to a high of 93.35 on oil. And that really didn't take us that far. 93.84 would actually be a half deviation. So oil not doing anything that impressive. Let's see here. We got a low side. We get a bit of a low move down. We can check that one out. Low down to 92.45. That almost took us down a half deviation. So, it's just basically in a very small trading range. Looking on over and looking at some other markets. Got gold. Did make a nice little drop right there. It's like the lowest low we got on gold this morning. It was down to a low of 1642.6. Well, 1642 would have been our half deviation mark, so we're right there, just sort of oscillating in that area. And, gold's thinking about moving a little bit lower. It definitely has room to move lower. We'll see if it does before the day's over. And now let's go ahead and check out silver. Silver moving on down to a low side of 29.86. So on silver, 29.86, 29.71 would have been a half deviation, so it didn't even make it. It's like, just overall, just very, very quiet. And markets are a bit exhausted waiting on that volume to all come back in and kick in full throttle. And we got a low right here of 3.6525, and copper right there, 3.65, let's see, 3.65, that's actually pretty good. 3.65.7 would have been a half deviation. So at least to hit actually 0.7 deviation. So that hit a half and a 0.7 before doing its retracement right there. And then going on in and looking at a couple other markets, let's check out a couple ags and a couple FX. Here we got a high of 690 over here on corn. That'll put us up to almost a full deviation. We got a 688.9, which would have been your first. So basically right here, you would have tightened your stop and turned around. So it didn't quite hit that full deviation before it retraced all the way back, but gave you a perfect marker to tighten that stop. And then looking on over at soybeans. Soybeans flew on down first and then moved its way on back up. So anyways, go ahead and wrap up with that right there. Hope you all have a great day. Stay tuned. We're going to have Basil Chapman coming on and stepping in for David White today. And just keep going, keep trading, and we'll see you tomorrow right here.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.